welcome, Radio Pride listeners. I appreciate you as always, and hopefully you continue to get tremendous value from this podcast. And I'm trying to bring some tremendous resources and experts in their own different fields to help you expand your thinking around building your own wealth, controlling it, and bringing you this freedom of life. So today I'm honored to bring a friend of mine, a guest, Mark Hutchinson, who is the founder at Core View Wealth. And he's a fellow authorized and infinite banking practitioner with me, and gotten to know each other. And I really valued his opinion and expertise. And I wanted to bring him on here today to help dispel a lot of myths around the infinite banking concept, what it is, and how it can help you, whether you own a business or just for your personal wealth and legacy planning. So, Mark, really appreciate you spending some time sharing your wisdom around this.
Thank you. Appreciate it.
Now, you've got an interesting background. You can share a little bit about it. And if you could share with the listeners, like, how did that evolve and how you got introduced into the banking concept? Where did you guys meet?
Yeah, sure. So I do want to thank you for having the opportunity to speak to your listeners about something that I'm so passionate about, which is infinite banking. My journey really began, although I didn't know it, but decades ago. And that's because I was living inside of the traditional financial system as a business owner and as an executive. And I saw firsthand how money and moved through my world, but I became disconnected from it. And what was happening was, as money was leaving my world, I realized that this lost opportunity just kept moving away from me. Like, once the money moved out of my world, then I lost control of it. And it was the realization that it could no longer do anything for me once I lost control of the capital. So really, I was trying to, understand these concepts, but I didn't know anything at all about infinite banking. And 2008 happened. And just like many other people, I suffered a significant market loss. I exited the system and I didn't re-enter. And I realized, had I re-entered or just stayed in there, I would have probably had a better outcome. But ultimately, it led me to discovering the infinite banking concept. And it was a journey that I was on to try to exit the system, because I had been through way too many of these. They were all out of my control. And I didn't like that feeling of not being in control of the outcome. And I started to think, this is not really a viable plan. To go on this journey where I'm hoping that by the time I want to have some type of retirement, that I would be in a situation where everything would come up perfectly and the sequence of returns would be the right sequence of returns. So it was really in that journey that I came across the infinite banking concept.
Yeah, and so many people, like you said, when something hits you in that level of power and impact, you're thinking things and you're reevaluating. Think about COVID. After recording this years after, but it caused people to have to rethink about their lives and what are they doing?
Absolutely.
How do you regain control on it in a world that there's not a lot of things we can say we can 100% control? And so
Right.
I'm with you on that in terms of it was an epiphany for me as I started exploring it. So what put it? I'll be sort of make it simple for folks to even understand what is the infinite banking concept. When I share this with people, they're just saying, "Oh, it's that marketing moniker to help you sell more life insurance." Right? Wow, it's funny. So, like, how would you typically explain it? Like, what is infinite banking?
Yeah, I tell people at its core, infinite banking is really building your own private banking system using specially designed dividend paying or participating whole life insurance. And it's usually at that moment that all the air gets sucked right out of the room, right? Because everyone has this opinion and pre-existing opinion of whole life insurance. Dave Ramsey's and Susie Orman's of the world, but there's a lot of the financial world. I see it on social media a lot with financial planners and advisors really just saying, look, permanent life insurance is a big ripoff and you should just have term and invest all the rest. It's a great cliche, but really that's not what this is about. If you think about it, having that dividend paying whole life insurance being specially constructed, it's constructed in such a way that it can be overfunded and overfunded rapidly. So that's what really makes a difference. When you think of traditional whole life insurance, it generally takes anywhere between, depending on your age and your health rating, 15 to 20 years before the capital that you've put in the way of premiums is equal to the cash value inside of the policy. And in what we do, as you well know, we're striking those milestones in year 4, year 5, year 6. It depends on the build and what that looks like and how much capital someone can fund their system with. But the goal here is to flow capital into the contract or into the policy, which gets it into an environment where you get a guaranteed return. It has a tax advantage status. It's continually compounding. And then when you need to access that capital, you can borrow against it. You can use the insurance company's money. They will loan you. And while you're doing that, your underlying capital is earning a rate of return. So it's a much more efficient way of doing things, and it fundamentally changes the game.
You often hear, and this is what, to your point, like why, and I think you kind of alluded to it a little bit, why most advisors would never even bring this up. Because they've been trained to, everything's got to be market-based, keep everything invested, right? You got to keep investing. This is the market's maybe the best place to invest. So why the whole life insurance is just the worst investment, right? It's the worst one to make. Why would anyone do it? And so that's typically what you hear is that's one of the biggest misconceptions around this. It's not even an investment.
So I think if you want to talk about like misconceptions, is that it's not, people think it's just about life insurance, and it absolutely is not. I mean, the benefits of life insurance are tremendous. And so we have those added into what we're doing. But at the end of the day, it's not about life insurance. It is about a vehicle that allows us to have these guarantees and these tax advantage statuses and really use it as a banking function. So that's one of the misconceptions. Another is that infinite banking is a product, and there is no product. It's a process. The other thing I think I hear is that it's a terrible investment. Well, this isn't an investment. Like, the concept of infinite banking is not about an investment. This isn't about chasing a rate of return. If you're looking for a rate of return, you would do that outside of this. What this is going to do is it's going to give you this environment where you have consistent earnings that are guaranteed, that are not correlated to the markets, and that you can build on top of. It becomes a foundational layer. So I think that's really an important distinction with this.
We get so accustomed to, and I don't think anyone I would know is in love with, say, their bank and what they do for them. It felt like they don't get a whole heck of a lot out of it. When they need some money, they have to go apply and go through a rigorous process to go be able to get it, right? This gives you another option to help you to store some wealth and finance anything in life, for that matter.
Yeah, and back to the advisor for a second. Advisors are trained to think transactionally, right? So everything's a transaction, not a system. And this is very much a system. And I think that's a really important distinction, is that it is a system. And the traditional financial system sort of teaches all of us to think linear. Advisors are paid when money comes into their world and sits in their system of products that they can sell or service. I don't say that in a way to disparage advisors. Great advisors bring a lot to the table. And so that's important to understand. It's just that if you go down to your local bank and you want to open up a IRA, I mean, they're going to give you products that the bank sells. You're just limited to that system, whatever that may be. But it just is not about chasing returns. Can we recapture the lost opportunity? Can we grab dollars, put them into a system that will allow us to use those for the rest of our life and earn a rate of return for the rest of our life? And those can be staggering. I mean, the difference that makes to your wealth can be staggering.
It's taking that lens of a long-term sort of play, to your point, right? And we're going to go a little bit into that. But before we get too far into that side, I do want to touch on IBC and thinking about it for business owners, right? And who's listening to this. And I think thinking of things around as a business owner obviously helps at a personal level too, because I sincerely believe the people who think about their family's wealth like a business, it's going to actually operate better.
Yes.
Similar in nature in terms of what you need to think about. Your experience, Mark, when business owners have finally seen the light around this, and like, how are they usually benefiting the use of IDC in their lives to support their businesses?
Yeah. And so let me talk about that, but first say that everything I'm going to say about a business owner really can apply to an individual because the concepts are similar. A lot of people will run their household like a business. I mean, you have income, you have expenses, right? So transactionally, those things are very similar to a business. What I do find is that business owners have a little bit of a different perspective on money in that they view money as a tool, where a lot of times I see that an individual who might be W-2 only and never been in business might not view money in the exact same way, but these concepts that you and I are talking about certainly apply to them. For a business owner, infinite banking isn't just theory, right? It's a practical tool for cash flow and cash flow management. So think of it as installing a line of credit in your business where you funnel capital into a policy. And then you can, in a normal world without IBC, you would be relying on banks, right? So you're going to borrow for whatever you may need. You're going to have some type of line of credit with revolving credit. You might use credit cards. You see that with business owners using credit cards. You've got short-term finance, you need capital, you've got payroll equipment, taxes, all of these things. But as a business owner, utilizing IBC allows you to become really efficient because in all of those transactions, money is leaving your system. It will leave your system as interest paid to others. And that is a very large expense, but it's just a much more efficient system and way of handling capital. So for the business owner, they want to build a pool of capital that's ever growing and compounding, and then collateralizing and using that for all of these business needs that they have. And that's where I see my client base that are business owners utilizing their policies.
It's just, to your point, in a simplistic way, in my mind, it's the need for storing cash that's liquid, and then, to your point, accessibility of financing. Most businesses are going to run across a need for that.
Yeah.
And to that point, with the ebbs and flows of business and economy, all those things, payroll, like you can compound all that. Taxes, typically it's just flowing through a bank account and just paid out.
Yeah.
Or borrowing or having to get approvals for lines of credit or loans.
Horrible.
Right. And so this is just taking that into account and saying, what if you can actually control that whole process?
Yes. And one of the saying, which I know you're very familiar with, is banks will lend you money when you don't. And when you do need it, it's funny how you no longer hit the ratios and everything that you need to hit. When you need them, that's when they generally will step away. Or if you hit a rough patch and you've got a revolving line of credit and you haven't paid back that for at least 30 days in the previous 12 months, they'll term all of it, part of it, or whatever. I mean, lose control. I have a business owner client. He's a construction company, and he needed to buy some trucks to add to his fleet. So he went out, he evaluated, he looked at the loan rates that were between 8 and 9%. And he said, no, I'm going to use my infinite banking. So he paid cash for those vehicles. He took a loan from his policy. He owned the policy personally. So he loaned his business the $175,000. They purchased the trucks, and he has to pay 5% interest. So that's the insurance company's cost of that capital. But his underlying 175,000 is also earning away underneath all of that. The net borrowing cost to him is about 1%, roughly 100 basis points. So that's a pretty cheap loan. But what's going to happen is, think of it this way. If he were paying 8 or 9%, you're talking like $40,000 worth of interest that he would have transferred to someone else. If you have $100,000 as a business owner moving through your world, and you can figure out a way to flow that capital into an IBC policy, let's assume that you earn 3.5%. 3.5%. In 30 years, do you realize that $100,000 would have a future value of per year for 30 years of like just over $5 million? And in 40 years, it's like $8.5 million. So the problem that we have here is that people don't look at these things through this lens. They will just take the 100,000 and let it leave their system, giving up future value. Now, we talked about borrowing, and yes, there's a borrowing cost, but even if you have a net 1% on that, if it's 2.5%, that doesn't cut the number by that much. Even at 2.5% across those long periods, it's like, I don't know, 4.5 million and 6.5 million. Those are rough numbers. So circling back to that business owner with the trucks, you're talking about $500,000 that capital would earn. And so people, without doing this, are giving that up, Tom. I mean, they're just literally giving it up.
The amount of opportunity cost that, it's just because you don't see these things, like you flip it on a day-to-day or month or even annual basis. But the amount that could be sort of compound, we run over decades, and we should put that calculation on paper.
It really is. And I think people lose sight of the fact of how much money actually moves through their world.
Things that you might see can have support around that.
Yeah, I mean, it's really all of those things because you can use it in so many different ways. We will see where a bank or a lender will come in and they'll see that someone has, like, let's say an IBC type policy, and they want to come in and, what's the term I'm looking for? Assign. They'll put an assignment. So that's where they're looking to put an assignment. We're like, no, you don't. Here's some term insurance. We'll just go get some term insurance. We'll assign you the term insurance. You're not going to touch this because this is too powerful, because it's a legacy tool, right, for the client. So these are really important things to do there. We see a lot of cross insurance where we have partners so we can support using IBC style. We can use it for key employees. There's a couple of key employees and he wants to build something with cash value, with a nice death benefit to support the family, to be able to do some different things, give them access to capital. There's just so many great ways of using it inside of a business and not losing control of your capital. That's the most important part of this.
Yeah, it's amazing. And it's funny because when I was talking to a CPA, and I asked them the question, I said, I think a lot of your business owners utilize these sorts of strategies like infinite banking or leveraging your whole life insurance. He said he was pretty sure, but he said, I don't ever see it on their tax returns.
Yes, correct. And when you say deposit, it reminds me of something that I think is important to state. everyone's interaction with insurance, all types of insurance, whether it's property and casualty, health insurance, automobile insurance, any type of insurance is always a payment. So people will often look at an IBC style policy and think of the premium that is going in as a payment. And it's actually not a payment. It's a deposit, right? Because when the premium goes in, when the deposit goes in, it shows up as cash value. Year one, obviously, we have a little bit of a hit, but once we get into year two forward, it's generally dollar for dollar or greater. So if you take an asset like cash sitting in the bank and you deposit it into your IBC policy, it shows up as another asset, which is cash value. So really, it's an asset transfer, and that it's treated better and has all sorts of wonderful benefits. If it sits inside of the policy, I will keep my cash in my cash value, where it will then earn in a tax advantaged way and be accessed tax-free forever into the future, rather than the treatment that it gets in a bank.
That's right. Yeah, and I always joke around the taxes. We've had conversations around this too. It's a whatever set of incentives, right? They want us to protect our families, and plenty of very wealthy and powerful people actually use these strategies too, right? Not to say that you have to have that kind of wealth to take advantage of it, but they see the value in it, and so that's why there are also tax advantages around it.
Correct.
It really provide a good sort of blanket for outside of just the financing component, but like to protect our families and our livelihoods. Right? We don't lose sight of the fact of that as part of this, that it is still life insurance, which has a huge amount of benefits to it.
Correct.
So it's just one of those things that there's a reason why there are tax incentives.
I think that it's the whole concept of infinite banking and the book Becoming Your Own Banker by Nelson Nash it's a brilliant financial education tool. It really does teach you about stewardship, right? I think that that's one of the problems that we have here, is that there's no financial education. And it's tragic. It really is tragic. So people like you and me, I mean, we make a big effort to try to help to educate people so that they can educate their own families and siblings and children and everything. So when you are utilizing the infinite banking concept, it just automatically teaches you the right way to think, right? I think that that's an important aspect of all of this, is your thinking. And Nelson really deals with that quite a bit in the book, Becoming Your Own Banker, a must read for everyone. And it comes down to this lens of we have to be our own steward of our capital. We need to manage our capital. We need to control our capital. And by utilizing this system, we're able to do that. And we're able to recapture all this lost opportunity. And instead of transferring money to others, we can keep it in our own system, our own world, and just keep recycling the dollars and moving them through our world. The flexibility of the system allows you to use the capital for literally anything. So if you're an investor, you can use it for investing. If you need to send kids to college, you can use it for college tuition. If you want to buy cars in your family, you can buy cars. If you're a business owner, you're going to use it for business, but also personal. I'm an investor. So I use my infinite banking system to make investments. So my capital first has to come into my system. Once it's in my system, then I'll take a loan and I will go and make an investment, earn a rate of return for me, and come back. And then we just keep cycling these dollars in the Hutchinson Bank, if you will.
Yeah, no, I think that's the teaching of that. And sometimes that's a natural step a lot of people make, is like, hey, I remember the day I helped my son open up his for checking account one day, to go to your local bank and open that up, to deposit money that earns like 0.00.
Right. And I'll talk to people and we'll start to have a conversation about finances and tell me about how you're structured. Tell me about this, tell me about that. And invariably, we will get to automobiles. And they might say to me, I lease my cars. Oh, you do? Well, you're not a business owner. You're an individual. You have a W-2. You are leasing cars? Yeah. Well, why are you doing that? I mean, that's just a question. Well, because you always have a car payment. I mean, I know I always have a car payment. And I'll say, well, have you ever thought that maybe you don't actually need to always have a car payment? Like you can change your thinking around that there is another way of accomplishing owning a car and not having to always have a car payment. And so it starts to open up these ways that people have not thought about because the traditional financial system teaches them and pushes on them constantly the marketing of this constant car payment. Get rid of your car every few years, get a brand new car. Well, you're feeding a system and we don't need to do that. So there's that. And then I find that my observation in people who are using the infinite banking system is that because their thinking is different, I see a lot of sort of from scarcity to abundance, from reactive to proactive, from outsource control to personal sovereignty. I just see this shift in people, which is really cool because they are thinking differently. They're seeing this system that can be deployed and it starts to make them think differently.
Yeah. And that's just like the compounding the growth over long periods of time. And it's also reinforcing the need for us to continue to learn and grow with these things. And so talk a little bit about that. I mean, obviously it's one part of the, it's not always just about the dollars, but we're passing on values, our experiences, the education, and knowledge to the next generation of children so they can take it forward. So sort of even just to transfer wealth that, say, a high IVC system itself. And
yeah, so the beautiful thing about this is this significant death benefit that can be built over time that, if properly structured, can really benefit. You have the Rockefeller and the Vanderbilt, two different ways of doing things, right? One divide it all up and distribute it. And the other is we don't do that. We build a system and everyone benefits from the system. So there are options in how you structure up. It's important. I think people find it very strange when I talk about policies on children and grandchildren. For some reason, it strikes people as weird. Like, why would I put a policy on my child or a grandchild? It's because you're thinking about it as life insurance instead of a system that can be created for that young individual. My kids are now in their 20s. And we have had policies for a long time. They have policies. So they build cash value, summer jobs, excess cash, whatever goes into those policies. And that's part of the family bank that we have. And they, as they get into their careers, will be adding another policy because obviously there's limits to all of this stuff. And so the younger you are, it's a little bit harder to get higher limits. More assets you have, the higher your income. Obviously, we can open things up, which allow a lot more capital. So it's quite a system that can be created. And it really does promote this long-term generational thinking to start to build a system. Best time to plant a tree is today, right? So even if you haven't started and you are late in your career, you've done none of this, now's the time. I mean, you can really build something amazing today and into a short future that will be passed on to the next generation and just allow things to happen at a very different level. There's lots of great books written about it. One of them is Entrusted. I love that book. It was written by Howell and York. And it's a tremendous read if someone's interested in succession planning and what that's all going to look like. And so, yeah, I really encourage people to think about this as more, use it as a tool today, but think about this as a much greater picture. There's much more going on here.
And we can easily get wrapped up, and I'm certainly guilty of it on occasion myself, in the numbers and trying to maximize every dollar in return, right? And then, and again, support for people to look into that and explore that. But to Mark, your point, I think there is a bigger picture in all of this, is that this is just resources that help people fulfill their life sort of mission. Right?
Yes.
Mission around producing an impact, and it's a resource, and we're just trying to harness it in the most efficient way that's within our control. So,
Absolutely.
we should.
Right. Agreed.
So on that note, you kind of already alluded to it, but I did want to cover a little bit of a topic for others. So obviously supporting business is great, and sort of just our natural areas of our lives you want to support, the financing and as resources. But talk a little bit more about how you're using it for investments, right? On top of it, because typically it's like, if I want to, some people's objection is that now I can't go invest, right? If I'm going to do this, right, it's taken away from my investments, right? That's going to earn way more. So talk to me about how you use it and how you see others using this to take place of the investment, but actually fuel the investment.
I invest a lot in syndicated deals. So I'm a passive investor due to time constraints, right? I don't have time for that. So I'm going to be on the LP side. So what I do is there's two basic approaches for me. One is, if I'm going to invest in something that is a new build, obviously there's no cash flow in that for quite some time, right? So that requires a little bit of a different approach than if there's something that I'm investing in that does have cash flow. Let's say within the first year, moving forward, it's going to have cash flow. So let's use the example of no cash flow. In that situation, let's say the deal's $100,000. We put the $100,000 into the policy. We take the $100,000 loan and we fund the investment. Now, because I did borrow the money, I have interest costs, so I have carry. That interest carry, the way that life insurance loans work is that you are billed for the interest on your policy anniversary. So whenever that period might occur compared to when the investment was made, you'll be billed for the outstanding interest on a daily basis. Now, just so that you know, any payment that you make on a life insurance loan goes to principal. There's no such thing as paying principal and interest. There's no amortized interest. It is a principal payment only. So you reduce the principal, which reduces your daily carry cost on your outstanding loan, right? So in my example of no cash flow coming in, what I'm going to do at the end of that policy year, when I'm billed for the interest, I'm going to not pay it. And what the insurance company does in that case is they say, oh, okay, so you're not going to pay the interest? That's fine. We're going to add it to your loan balance. So they just add it to my loan balance. And then I repeat this for year 2, year 3, year 4, and let's say this was a 5-year deal. And in the 5th year, I come out at a 2.8 multiple. So I invested 100, I've got 280 coming back to me. My decision is, do I repay the loan? I came out with 280, I repay the 100, I have 180,000. Do I repay the loan plus all the accrued interest? Or do I leave the loan open and use all 280 as a brand new PUA payment into my system? Because by doing that, I put all of that capital back to work. So think of it in this way. If you have a bucket full of water and that represents $100,000, when you took the loan, you emptied the bucket. So you're sitting there with an empty bucket, but you have one bucket. If I take the 280 and I put it in as new premium, well, now I have another bucket of 100 and another bucket of 100. those will forever earn for me, right? So these are really important decisions, and those are things that we do when I review with clients and we make those decisions. Getting a little bit complicated here, sorry. But that's when we would make those decisions to either go new premium to get rid of that or not. In the case of an investment where there's cash flow, then I use the cash flow to service the debt. At the end of the day, Tom, it's all about putting the underlying capital to work. Because once I put it in my system, it's now earning for the rest of my life, and all of that will be passed into my estate. So that's really powerful for me, because the other option is I keep the 100,000 in the bank and I just write a check. And when I write that check, that money is now dead. My carry cost for doing what I just described to you is 1% per year. So that's a small cost for me, because I'm going to look for the alpha in the investment outside of the insurance policy or outside of my system. Did I explain that simply?
One thing that I think sometimes can get lost in is, and I know you said it, is that because you're not touching your own money, you're actually borrowing the life insurance company's money and just using your cash value as collateral. We'll see that all your cash is continuously earning for that whole time, right? Even while you're using the life insurance company's money, right?
Right.
That money is working, never stops working.
Right.
If you haven't borrowed it, right? It's going to continue regardless of whether you're borrowing or not.
Right.
And so that's a really key aspect of it, that over a long period of time. And that's why you want to add more to your base.
Correct.
You build upon that, and then the control as the person to know what you're investing in, which is huge. The risk isn't in the investment, it's in the investor. Like, what do you know about what you're investing in? In this situation, you're doing your due diligence and putting in things that you know better and deploying them, but using the life insurance company's capital to do it.
My very first client in IBC, a business owner, owns multiple businesses. And it was about a year into our working relationship when he came to me and he said, before I knew about IBC, before I met you, I made an investment in a restaurant, and it was a pretty significant amount of money. And that investment went bad. He lost it all. And he said, as I look back now, knowing what I know today about IBC, he said, I'm absolutely sick that I didn't make that investment from a policy loan. You get it. Like, you really get it. Because people will say, are you crazy? You borrowed a couple $100,000 and the investment went bad, and you're happy about that it happened. You owe the insurance company a couple $100,000. But the truth of the matter is, he understood that capital that he lost prior to IBC is gone forever. And that if he would have just had it through a policy loan, still had that horrible outcome, at least the underlying capital would have been earning a rate of return for the rest of his life. And he got it. He understood it. And he said, look, it may have taken me 10 years to pay it back, but at least all of that capital would have been there. And it's the same thing if you think about buying a car, using IBC to buy a car. When you're done paying off the loan for the car, you have your capital and the car. When you go buy it from a dealership and you have financing, you get to the end and you have the car, but you have no capital. So it's just, once people get it and really understand it, I can literally see the light bulb switch on with people. I know you've seen this look before. It really is cool when people finally just go like, I got it. I get it. It does, right? Concepts are very foreign to what we know today and what we're taught. Remember, there's no financial education. So what you're actually taught is by observing. And when you observe everyone around you buying and leasing cars, or you observe everyone going into debt, and you just observe all these things, well, that's how you're learning. You have to really change your thinking. And for me, like the biggest part of my job, and I know you know this too, it's education. That's what we're ultimately doing. I spend the vast majority of my time educating.
Well, today is hopefully you've covered quite a bit of ground, Mark.
Thanks.
Ben, I'm sure we'll be doing more deeper dives on this, but I think we appreciate you giving really broad strokes around the infinite banking concept, what it is and what it's not, and practical uses of how it fits into our lives. And so for those who are interested, Mark, what would be a good starting point for folks to kind of step forward and learn more?
Yeah, so you could reach out to me at coreviewwealth.com. You can email me at mark@coreviewwealth.com. Of course, they can reach out to you as well. What I think what I would like to sort of leave people with is, don't let your hard-earned dollars be one and done. Like that just doesn't work. Build a system that lasts forever. If you can do that and see infinite banking as just more than a financial tool, it's a philosophy of stewardship and control. You build liquidity, right? You're protecting capital, you're building a legacy. Once you get all of that and understand that every dollar has a job for life inside of the system, that's where financial freedom begins to me. That's financial freedom.
Mark, I really appreciate you sharing all your wisdom, experience around this. I know, you more, that is a core element of you and around education and sharing and helping people discover these things for themselves. So thank you for joining me. We'll definitely be doing more of these in the future. Appreciate it.
Thank you. Thank you. Really appreciate it, Tom.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.